I now hand the conference over to Mr. Mahesh Vishwanathan. Thank you, and over to you, sir.
Good evening, everyone. Welcome to this conference call. So I'll open with some brief statement on the quarter. As you all know, gradually there has been an unlocking of the economy since July, or in fact since June itself. And therefore this quarter in comparison to the previous quarter was definitely much better. Volumes improved across all product categories. However, we were still behind last year's numbers at this point in time. At September end, we were still behind last year's numbers. I think through the quarter we have seen improvement in various parts of the economy, and for ourselves, we believe that we are at about 85 to 90% of where we used to be in similar period in the earlier years. So that's a brief opening statement. In terms of numbers, we recorded a sale of about 639 crores in this quarter, compared to 715 crores in the previous corresponding quarter of the previous year. So that's at about 90% of what we achieved in the last year. In terms of margins, I think again we are coming back to our regular margin levels. Our gross margins this quarter was about 28%. Comparable numbers in the previous year was 27. Last quarter was 25. Obviously was lower. Profitability, again, as volume picks up, profitability numbers should improve. We are at about at PBT level, we're at about 14% as compared to 17.5% in the previous year, but up from 12% in the previous quarter. Segment-wise, again, electrical cables has done fairly well. We are at about 92% of last year's numbers. The laggard has been on the communication side, but that, as you know, is a segment which is impacted by the financial constraints that all telecom operators are facing. So that will take some more time to change and improve. What is positive about that segment is that while there is an issue on long haul cables being sold or higher fiber content being sold, more and more small fiber count cables are coming into play. So work from home has provided this opportunity, and more cables around the FTTH operations are coming into play at the moment. While the kilometer numbers would be large, the value realization there would be lower because of the smaller count of fiber there. Positive thing again for us to report is that the new product segment, so that consists of fans, lamps, switches, switch gears, and water heaters for us, that is showing improvement. And we're quite happy that the distribution effort that we have put in over the last year and a half is now starting to pay off, and we are able to see volumes coming in from this sector. And I think, as I've always maintained in the past as well, the moment we hit an annual turnover of, let's say, 125 to 140 crores, we should be breaking even there. And I think that is still very doable. So with these opening remarks, I now open it up for questions. We're both here to take questions from you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star followed by 1 on your touchtone phone. We have a first question from the line of Sonali Salgaonkar from Jefferies. Please go ahead.
So thank you for the opportunity. So my first question is regarding your other non-operating income. we have seen a sharp decline on a year-on-year basis this quarter. So could you throw some more light to that, and what is the trend that we expect in other non-operating income going further into the coming quarters?
Okay. Basically, the dip is on account. Our main non-operating income would come from dividends, and as you know that we have considerable shareholding in Finolex Industries, and Finolex Industries they declared a dividend in the month of March. That was the second dividend that they declared during the year 1920. And that amount later on, the dividend that they were declared in March was later on decided by them as to be the final dividend. So there was no inflow during the current quarter, but in the March quarter we had that extra amount. So if you see the full year numbers, last year would have been higher by about 42 crores. So that's the only thing. Otherwise, there is no major change.
Understand. So my second question is, within the electrical cables and communication cables, could you help us probably give a color as to which end user segments are now resuming better as compared, in the B2C as compared to the B2B currently?
Okay, so we've seen growth happening in the wire segment, which is going for housing, and we believe we've post-September, of course, reached pre-COVID levels. It's been steadily climbing. We've seen a lot of launches of projects, mainly in the south. I'm still awaiting data from other places to know what's happening, but I do understand residential is doing better than commercial. Now, if you look at our LDC product range, we have automobile wires also in there, where the wires are going for harness making. In that segment, last couple of months, we saw a surge taking place in the wire requirement by the harness makers, probably because of the uptick in the cars and two-wheelers, which is happening. So then there are sectors like agriculture. Because of the monsoon, a very good monsoon all over the country, a large segment of three-core flat cable and winding wires, which goes for the agriculture sector, was subdued for us. Rains have gone more than normal, and the market hasn't opened up as yet, but we do believe in the next 15 days it should open up and we should start seeing good business there again. Then when it comes to the communication sector, we see a good demand in LAN cables for computer networking. That segment we are running full out. We are in fact expanding equipment and capacity in that segment. I think a lot of demand is coming because of the COVID and people working from home, and they're wanting high-speed communication. So for high-speed internet, we are having LAN cables or fiber to the home. So there is a demand for LAN cables, and there is a lot of demand for small fiber count, 1 or 2 fiber designs for fiber to the home. In fact, we ordered more machinery to expand for the small fiber count cables as well. And this trend will continue even if COVID goes away, because people are getting used to working from home. So those segments are doing pretty well. In the power cables little bit and the flexibles, which is the panel wiring, we still see subdued demand, not picked up as much as yet. And of course, the new product lines, as Mahesh explained, because of our distribution efforts, we are seeing good growth over there, though the base is small. But we are seeing a hefty growth because we are able to touch more retail outlets now and place our products there. And so we are trying to go from 50,000 retail outlets to 150,000 retail outlets by the end of the year. And so we do believe we do some good growth there this year.
Understand. So how much is LAN and FTTH accounting to our communication cable revenues right now?
So LAN is about 100 crores a year.
LAN is roughly about 100 crores a year. And see, in the fiber part, we've seen in the communication segment a drop, I think, about 34%? 35% drop is what we've seen. That's mainly because of the telecom companies not expanding as they used to. A lot of tenders of the state governments, which were for center and state sharing basis, they have slowed down. There are some new tenders coming in from Tamil Nadu. We quoted. There are like the Prime Minister had announced in 1,000 days to connect all the Gram Panchayats. Those tenders, I think, are out and still to be quoted. So there would be some demand coming in there, but telecom is always the bigger demand in the communication segment, which right now is not doing very well. Even the fiber prices have dropped from $6 to $3. This is because of the phenomenon of China, and when China Mobile suddenly scrapped $100 million fiber kilometer tender, the worldwide prices dropped. So, and of course, we all are aware of the AGR issues and all that of the private telecom companies, and hence their ability to wanting to expand and spend money. Based on that, telecom right now is having a lower sale. And even if you go on buying a lot or selling a lot of small fiber count, it will be a very small percentage of the sale lost, because those fiber counts are going 48, 96 of that type, and here we're talking 1 into 5. So the ratio is completely different. Nevertheless, it's a new product line which will grow for us, but not in the same proportion until telecom kicks back in.
Understand, sir. So thirdly, on the Capex, we did maintain our earlier guidance of 2 billion Capex over the next 18 months, though we had deferred by about 6 months. Any update on that?
It's not changing in terms of numbers. It doesn't change in a big way. It's more or less around the same number. Timing wise, there could be some changes depending on when international travel really opens up, when the technicians from overseas can come and commission certain lines. So that could be the only difference. Otherwise, the timing is pretty much the same. Give or take a couple of months here or there, it should be the same.
Understand. So, and lastly, how much of our revenue is emanating from B2C right now versus B2B? And also, sir mentioned that we'll be increasing the retail outlets from 50,000 to 150,000 by the end of the year. That's a pretty ambitious target. How do we go about doing the same? Okay. That's it from my side.
So, if you recall, we've been saying now for close to 4 or 5 quarters that we have been spending a lot of time on improving the distribution reach. So our initial target was that we should have a distributor strength of about 500 numbers, each of them covering approximately 300 retailers each. And that's where the 150,000 number comes from. So as we stand today, at the beginning of this month, the distributor count was 488. And the opportunity that they had to cover has crossed 110,000. Unique billing has crossed 50,000 numbers. So we still have 5 more months to go. So we are expecting that in the next 4 or 5 months, the opportunities that we have given to the distributors to be able to reach those 120,000 odd retailers they should be able to capitalize on them and take the unique billing up. So we are tracking this on a daily, weekly, monthly basis. So there is quite an amount of interest around it, because as you are able to have more larger footprint in the market, your volumes will also improve. So that's basically what we're trying.
And this is exclusively for the new products, right?
No, it covers our existing products also. So it doesn't mean that they are only selling fans or water heaters or lamps. There are also people who are selling wires.
Right. So, and what is our B2B, B2C mix?
Typically, the optic fiber sale would be B2B, largely. And power cable would be B2B. Some amount of flexible sales, which is the industrial wire, that would also be through rate contracts, so that would be B2B. And auto cables are B2B. So if I take all of them, a traditional mix would be around 65-35 or 70-30.
Understand, 70% B2C. So, and just one last clarification. Sir mentioned that fiber prices dropped from $6 to $3. What would be the time frame?
So over the last 7-8 months, it has been dropping, and currently there are some people who come and offer you ridiculous prices like $3. Okay, there are some who say, no, I want to cover for the exchange, and so that number changes to maybe 3.5 or 4. So it is in that range is what he was trying to say.
Right. So $6 was probably about 7-8 months back.
Yeah.
All right, sir. Thank you. This is helpful. That's it from my side.
Thank you. A reminder to participants, anyone who wishes to ask a question, press star and 1 on your touchtone phone now. We have next question from the line of Sunil Jain from Nirmal Bang Securities. Please go ahead.
Yeah. Good evening, sir, and thank you very much for allowing me to ask the question. First question relates to your gross margin. No doubt we are seeing some inflation in a lot of commodities, including copper and all. So, are we able to sustain this gross margin in coming period?
We have always treated our raw materials, the major raw materials at least, as a pass-through. So there may be a time lag, but eventually the cost of those items moves on to the customer, whichever way it is. If it is going down, also we reduce prices. If it is going up, we also increase prices. The timing may differ. There is more pressure on the downward side from the market, whereas more pressure from us when the costs are going up. But with a small lag, the price changes are transmitted to the market. So that's why you will see, not just now, you will see across multiple quarters, our gross margin numbers are more or less steady, unless it has to do with a big change in the mix. Otherwise, the numbers will be more or less steady.
Okay, so normally the time lag is a quarter or so?
No. It doesn't go for a quarter. It's a month maybe. At the longest is about a month. It's a couple of weeks. We just want to make sure that any change seems to be like a change which is a sustainable change. It's a permanent change. One day blips, we don't make changes, but something that we are able to observe over a couple of weeks, then we make a change.
Okay. And sir, second question was, you are targeting increasing your distributor to say 500. So will there be any change in your credit terms to them, or it will remain your stagnant?
It is the same. It is the same across all product lines. The credit terms are the same to whether he is a distributor or a channel partner who has been with us from early times. We are very clear that we are not a bank, that credit risk is something that we do not want to take. we are happy to offer the customers a choice of financing, but without any recourse to the bank. That's basically how we do.
Last question from my side related to your expansion of distribution network. So are you also planning to support this expansion with some sort of advertisement, mass scale advertisement or something? Is there any budget for that for the next 6 months?
Yes, in fact, we had been spending and increasing the spend on advertisement over the last few years. This year, of course, with COVID hitting everybody, discretionary spends have come down a little bit. But in the long run, yes, we will need to support them, and whatever support is required in terms of ad or any other marketing support, those are things that we will continue to do.
So generally, how much is the percentage of sales you are targeting to spend?
Okay, leave out this year. The average last couple of years was about 1.5%.
1.5%. Okay, sir. Yeah, great. Thank you very much for answering my question. All the best.
Thank you. We have next question from the line of Ajay Sharma from Cycles Investment Advisors. Please go ahead.
Hi, thanks for taking my question. In the last quarter, you mentioned that, or in the last con call, you mentioned that the working capital of the industry had improved in general, that even your competitors were not really offering much credit. Now, I just wanted to ask, is this situation still prevailing, or is the industry going back to the pre-COVID level of working capital and channel financing and all that stuff?
No, I think channel financing, everybody is going to use it as a means of reducing risk from oneself. Some of us do it, like for us, we do it with a no recourse basis. Others do it with certain percentage of recourse to themselves. But that is something that is there to stay. I think the larger companies, I think few of them take a punt on the pricing. Most people would follow some kind of a hedging out there. So the trick is in terms of how you manage your receivables and how you keep a tight control on inventories. So, for example, we do not buy anything more than what we can consume in a month. So that's been our practice for a long time now. And so our exposure to the changes in the market are therefore minimal. How each company would do it might vary, but broadly this is what we follow. But I think overall the trend in the industry is that they would like to see more turns and lower capital investment in inventories or receivables.
Okay, that's very helpful. And on the same topic, in the last conference call,
whether everybody is at the same space or not is a different matter.
Okay, I see. And on the same topic, you also mentioned in the last conference call that the company was looking at increasing their market share by catering to dealers that already had an outstanding credit balance with other competitors, because you said that competitors were not sending over more products to their dealers until they clear their credit balance. So has there been any progress on that front? Any change in the company's market share?
Yes. When we talked last time, that's what was happening in the market. The competition was going slow on giving them products. So we got a lot of the competitors' dealers to buy our products. That helps us, and it is providing us the growth in the retail counters what we are looking at. Because once you start a relationship with someone, even after some time, if the original supplier comes back, the retailer doesn't really stop his relationship with the newcomer. He tries to keep both. So we are hoping it does benefit us, and we will continue to get business from it.
Okay, that's great. My next question was, what is happening with the J Power Systems joint venture? Have you seen any progress on that front? In your annual report, you still said that your time horizon was 1.5 more years of subdued performance. Any changes there?
No, the performance is still subdued because while consumption at the retail end has shown an uptick, consumption at a project level on newer public installations, that is still slow, and decision making within the government machinery, because if you see all these utilities are majority government owned, decision making is still slow. So while tenders have come up, no major decisions have happened in the last 4 to 6 months.
Okay, fine. And my last question was, if you could just tell me what some of your internal goals are for the FMEG sector, your segment. Do you have any goals that you want it to be 5% of revenue by a certain year, or what should we expect from that division going forward?
Which division?
Your FMEG, your appliances.
Okay, the new ones, the newer ones. Okay. See, traditionally, if you see, electrical cables has been approximately 80 plus percentage of revenue. Communication has been around 15% and others has been 5%. So our idea was of getting into some of these products as A, they were allied, and B, we wanted to de-risk depending upon one product segment for substantial part of our revenue. So I think the goal is over a period of time, bring this to a size which is equal to communication cables at least. Okay.
I see. And any time horizon for that? 3 years, 5 years?
Yeah, about 3 years.
Yeah. Okay, great. That's it for my side. Thank you very much. Thank you.
Thank you. Anyone who wishes to ask a question may press star and 1 on your touchtone phone now. We have next question from the line of Hiren Trivedi from Axis Securities. Please go ahead.
Thanks for the opportunity. My question just got answered. I just want to have one quick question for the Capex. So what is your Capex plans for FY21 and 22? And on the profitability of the FMEG segment, as you mentioned that you are targeting around say maybe 15% of the overall revenues in next 3 years. So any on the EBIT levels, any margin guidance or something that we can look at?
Okay, I'll answer your first the Capex question first. We had said that we would be spending approximately 200 crores over the next 18 to 24 months, and that still stands. So major part of the spend is going to happen on putting up an electron beam facility to cure cables for industries which require cured cables. The second one was to add some backward integration there. So tinning copper as well as copper clad steel. So these would be 2 backward integration projects. There is the conduit plant which is more or less ready at Goa. We're waiting for the technicians to come in from overseas to commission it, and some expansion on the optic fiber cabling equipment. So this is broadly the areas that we are spending money on, and the time horizon was between 18 to 24 months. That has not changed much in the last 6 months or so, unless there are delays in the in travel opening up and restrictions still being placed on technicians coming in from overseas. Barring that, we do not see any major change. Your second question was on the newer product lines.
Right.
So yeah, we said we would like to see it reaching a level of 15% of revenue over the next 3 years. We think at a turnover of about 150 crores, it would be profit neutral. Below that, the cost of advertisement, etc., would be a drain. But since it is a necessary investment, we are continuing to do that. So once we reach this number of 150 crores, I think we should be making money there. So does that answer you?
Sure. Yeah. Thank you very much. Thank you.
Thank you. To ask a question, participants will press star 1. We have next question from the line of Raj Oza, an investor. Please go ahead.
Thank you for this opportunity, sir. I just wanted to understand how is our demand scenario from real estate side, like post-COVID situation. So how is demand from real estate side coming in?
Can you repeat the question again? How is the demand from real estate? Is it?
Correct.
So since the lockdown, we were also wondering how much are we going to get affected, and what we understand is earlier stage, whatever was affected was because of the labor which was moved out from various cities going back home. The effect was because of that, and as the people came back, wherever their wiring projects were on, they continued, because if you had in real estate sector anything which is under construction and started with wiring, it makes sense for him to complete the wiring and complete the building and sell the product. But what worries us is looking at the lockdown and its effects and a demand for future. How many new projects would get launched, and if there is a smaller amount of project getting launched, then we would face a wiring downturn at a later stage in life. So we haven't really got a handle on exactly how much that effect would be at the moment,
or when it could be.
Yeah, so that time will tell us in that sense. But there would be also a shake-up in terms of organized and unorganized sector. So while we may get affected on the demand side at the later stage, we may also gain from unorganized sector business moving to organized sector. So exactly how that will pan out, we don't have the correct number to share with you at the moment.
Oh, good. My second question is from the balance sheet in September 20. Okay, under current asset, can I get the breakup of our 816 CR financial assets? Is it possible?
Yeah, that's mostly in fixed deposit or in money market funds.
Okay, what will be the proportion of that, sir?
I think 1 second. Give me a minute. I'm just looking at the number.
Please, sir, please.
About 800 crores is fixed deposit.
800 crores is fixed deposit and remaining is your money market investment, right?
Yeah.
Okay. And the last question is, sir, like, do we cater to railway sector as well, because they are focusing more on modernizing? So, is there any scope coming in from that side?
There are opportunities. So in certain product lines, we are registered with RDSO. So on the fiber side, we are registered with RDSO. On the cable side also, our registration is pending with them. Their requirements are for standard electrical cables is not much, but they do require, I think, certain cables which are rubber insulated, which at present we do not make. So that is something that is a potential as we go forward.
Okay. Good, sir. That's it from my side, sir.
Thank you. To ask a question, participants may press star one. We have next question from the line of Ajay Sharma from Cycus Investment Advisors. Please go ahead.
Hi, it's me again. Just a quick follow-up to the previous question. So the economy has been open now for 1 quarter, but you guys still are not really sure if what's happening in the unorganized sector?
No, he didn't say that. What he meant to say was there is a pickup in the real estate offering, meaning our wires are getting consumed. But the understanding is that these wires are being consumed in projects which were left unfinished when the lockdowns happened. And now that people have returned to, the migrant labor has returned, so those projects are getting completed. But newer projects being commissioned or new projects starting off from the ground, that is still not very visible except if you go into certain areas in the south. So what we said was, if there is a slowdown there, then there may be a dip in the future for wires that go into residential construction.
A year later.
Maybe that might happen after a year later, or 8 or 9 months later. But
okay,
what we're saying is
that's just one segment, right?
Yeah. So all we're saying is we would not be surprised if there is a dip going forward.
I see. And okay, so then the unorganized sector then is still not.
No, the unorganized sector. What he said was while we will not be surprised if there is a dip going forward, there is the positive from gaining out of the unorganized sector, because when lockdowns happened, those were the people that were hit most. They didn't have access to people.
Still under stress,
money.
Right?
They didn't have access to people or money. So whatever volumes they were selling in the past, some of it has come into the organized space. So we must have gained some share over the last few months.
Okay, and my question was just that it's not going to go back to the way it was now. Like the impairment that's happened in the unorganized sector is permanent, right?
I hope so.
Whatever it is. All right. Okay. That's it. Thanks so much. Thanks.
Thank you. Anyone who wishes to ask a question may press star and one on your touchtone phone now. As there are no further questions from the participants, I'd now like to hand the conference over to Mr. Mahesh Vishwanathan for closing comments. Over to you, sir.
Thanks, everyone. Thanks for joining in this evening. I hope we've been able to explain the numbers as well as answer any questions that you have had. Thank you very much.
Thank you very much, sir. Ladies and gentlemen, on behalf of Finolex Cables Limited, that concludes this conference call. Thank you for joining with us, and you may now disconnect your lines.